Hello traders, Gary Wagner here. It is 11:49 in Honolulu, 5:49 in New York on Wednesday, 28th day of September 2022, and this is the Daily Report for gold and silver. Traders, for the first time in at least 3 weeks, we have seen a rise in gold prices and a respectable rise at that. A lot of it has to do with dollar strength, but gold gained almost 2%, 1.97%, with the dollar losing 1.24%, which means that approximately 0.75% of the gain in gold today was the net result of traders bidding the precious yellow metal higher. December gold is currently up $32.30. As I said, a gain of 1.97% and currently fixed at $1668.50. That is just off the high of $1671.60, and today it traded to a low of $1,622.20. Silver had a most respectable gain of 3.02%, and after factoring in today's gain of a little over 55 cents, is currently fixed at $18.89. As I said, a lot of today's gains in the precious metal, in terms of percentages, were the direct result of dollar weakness. The dollar lost 1.24% or 1.412 points and is currently fixed at 112.635. Most interesting is the high today, 114.745. That is the highest level we have seen in quite some time, and it will be the topic of today's opening letter, as well as our technical chart section. Unquestionably, the dollar has been in a parabolic move really since the beginning of 2020, trading from just above 89 to this recent high of 114.745. This is an extremely long-term chart with each candlestick representing 3 months to get in all of the data. The last time we have seen the dollar hit this high of a value was as it was coming down in May of 2020, and really it would be October of 2000, which was the first occasion when the dollar index broke above 114, 115, and actually traded to a high of approximately 121. But relative to that, on this chart at least, we can see that the highest level the dollar has been to comes in at around 129. However, that is extremely misleading because our data set only goes up to about the middle of 1985. In fact, sourced by this particular website here, we have data going from 1967 up to 2015. And we can see the highest value that the dollar index has ever had, and it came in at approximately 167, and it occurred between 1983 and 1985, at the same point in which we were tackling with inflation that just prior to this point was at the highest level in history, above 14%, with interest rates above 20%. Which brings us to our current analysis of both gold and the dollar. Since gold is paired against the dollar, to know where the dollar is going will give us tremendous insight in order to forecast where we could see gold prices headed. We're looking at a weekly chart. On this weekly chart, we have two things. First, a Fibonacci extension and a Fibonacci retracement. The extension begins in 2018 when the dollar index was at 88, up to these highs that came in just around April of 2020 at 104, and we begin the extension at 89.134. Based on that, we have seen the dollar index actually hit a 1.618% fib extension of this data set, which means that I believe on a short-term basis, we could easily be looking at a short-term potential top. If that's the case, we would expect to see a relief rally in gold and a softening of the dollar. If that is the case, I believe it will be short-term at best and fairly shallow in terms of the price moves we might see. At best, if we do see a further decline in the dollar index, I really wouldn't expect it to go any deeper than possibly 110 to 108. 108, of course, is the 23.6% fib retracement, and that is the data set from 89 up to 114. Let's see how that pertains to our support and resistance levels for gold. We are looking at a candlestick chart of gold futures with a Fibonacci retracement as well as a couple of horizontal lines. The fib retracement begins in August of 2018 after gold reached a low of about 1,020 and then began to trade higher here at $1,170 up to the all-time record high that occurs at about $2,088. As you know, for a long time, I've looked at the price point at 1680 as a critical level of support. It was based on historical data where here we see this price point acting as resistance, and then for a protracted period of time, we had 1680 as support. Other instances include here, as well as the flash crash. The most recent one prior to 1680 actually being taken out, which occurred over the last couple of weeks. As it did, it went to a low of about 1628, which matches up to the 50% retracement level at approximately $1,630. We believe that this is a key point that could hold. If gold trades lower from here, we would look at a break below 1,600, possibly as low as 1,580, and it's really based on a series of lows where here we saw it as resistance, and right here it became support. However, we do have a dynamics in play in which for the first time since the dollar went parabolic, we're actually seeing a little bit of weakness. So it would not surprise me, as I said yesterday, to see a relief rally or a bounce. That bounce began at 1630. It has gone just up to that. And the first level I would look at would come in between 1700 and 1737. That is the 38.2% Fibonacci retracement. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.